Welcome back, everybody. It's currently 10 p.m. of the last day of August 31st. We're going to do an unusual format. It's called Anatomy of a Scalp, double edition, because today we're going to do two scalps in the same, more or less, time frame. We're going to try to keep it as stealthy as possible. Exactly, that's not what I wanted to do. There we go. Okay, I want to start. Okay, like this shouldn't be a problem. I want to start with the intraday analysis. That was pretty, we were expecting safe cells below 1812.5 key level. So we are starting, we are well beyond New York session open, because it opened here even before. There you go. And we are starting to see in this time frame, we're starting to see price reacting 3 minutes of bullish trend, very, very strong engulfing bearish, immediately engulfed on the upside from bullish, but it is very short-lived, and then the same correction, as you can see, gets, this action is almost mirrored, almost exactly, and we are indeed coming from before in a downtrend, and we are starting to see that yes, we have some bullish engulfing candle, but very short-lived and immediately corrected, equally corrected by sellers. We start putting a line, a sort of price sensitivity area, when we see reactions on the left-hand side, and then we see that price breaks below here, breaks below the key level, and does, even if it's bullish, doesn't close above. The next candle, very small, but still closing below. 1, 2, 3 candles, all closing below, and all in a, as you can see, in a bearish fashion. As you can see, we are creating lower candles. Yes, very weak, because as you can see, they're very small and with a very small body compared to the whole size of the candle. Then we have, as you can see, this is exactly a mirror candle. This one, you flip it, is the same. The body is the same. The wick is the same, it's just opposite side. And then you see very, very small action. But as you can see, none of these candles is closing back above. So I'm not saying you should enter cells here, but okay. But there's no much buyers coming in, correcting as they did here. You don't see any bullish candle trying to make new highs. You just see bearish, small bullish candles. Okay, let's move on in the action. Okay, we are here, and then we see this very, very aggressive bullish candle closing above the one that I was talking about here. Exactly, we have a lower wick, which means that at a time it was bearish, but it reacted exactly at the same level on the left hand side, and it closed very strong bullish. So if you are at this 1 minute, when you see this candle close, you say, okay, wait a second, I'm not entering cells yet, because we closed above. Nothing is saying that we're going to retest, close above this previous body, retest, and then continuation up. There's nothing that says, since the main trend is bullish here, not here, but on the high time frame, we are seeing, yes, a pullback, but we don't know if price will
actually resume the trend here, or if it dips below, and then resumes from here. So we don't know which price is resuming, so we just base our price action reading on each candle. So from here you sort of, okay, wait, let's wait before firing the sells trades. And you see the next candle. Okay, you start thinking, okay, we are sort of respecting the trend line, as you can see. We are respecting the same trend line. There's no, but it might be the retest and the continuation up. So you wait the next candle, and next candle is again bearish, sorry, very close to the 1812.5, almost closing below, but for sure at one time it was full bearish like this. So it's not something that you want if you are seeing okay, I want to enter buys as a sort of a retest. So it's a very in live trading is a very strong blocker, because as I told you, you are still respecting this trend line. You are not closing below the key level, but at one time it went to retest these previous lows again. Let's see the next candle. We can see is bullish, very weak. It's not engulfing, as you can see. We have the next one, which is so this bullish candle is not engulfing the body of the previous one. The next one is very weak, is failing, as you can see. If we go look on the left, we are failing to close above the previous highs on the left hand side, which means, okay, wait a second, not entering buys yet, until I see closures above, retest, and then continuation up. So you create a sort of here resistance, and then we start already seeing a very strong engulfing bearish candle, as you can see here, closing again. Now is closing below these previous lows, these previous bodies, and below the key level. It closes without wick, so you're sort of okay, not entering safely yet, but you start seeing, okay, maybe this bearish trend is resuming. Okay, nice candle, sort of confirmation, because this candle, how is it built? It opened here, then it went up to the key level, got rejected, went below, and then closed here. So it did all this bearish action, because from these highs went to these lows, which are the same lows that we identified on the left hand side, the wicks. Very strong confirmation. You can start seeing, okay, what is the if I enter here, what is my possible trade setup? So it's like 10 pips, 12 pips above, or like at least 30 to this period sensitivity area,
if you consider that always gold overshoots, it's at least 36 pips. So it's 1 to 3, not guaranteed, but it's the minimum that you can get. You can think of entering here. Is of course higher risk because it's the first candle confirming the closure below the key level, and we are still not breaking these wicks on the left hand side, so it's very high risk. Okay, then we move to the next candle, and we see that we are still closing bearish. We went up, we went down, but then we retraced almost completely on the upside after again reacting at these same previous lows. As you can see, exactly almost on the dot. So if you entered here, at the closure of this one, you are still safe, of course, stop loss above here. But you see, okay, let's see how it goes. Okay, now you see a stronger body here being created. Again, top weak, immediately rejected, and closures at the price sensitivity area or slightly below even. And then we have a nice stronger closure here. If you enter, you say, okay, what I see is that there's a top wick, so the price went up and then went down. I enter on when the candle is flipping. Let's see the risk reward of this possible entry here. So you have like 20 pips, so it's getting kind of tougher because you are very, very far away from the key level. You are 13 pips from the key level, so the stop loss is higher. As of course 20 pips, you have to have at least 6 pips, 60 pips, and it's quite, there's a price sensitivity area, the main trend is bullish, so I will not suggest entering here, in my opinion. Twenty pips stop loss, counter trend, small area one with PSA at how many pips is there? It's like 20 pips. Yes, 20 pips. Okay, so I wouldn't enter here because this price sensitivity area, this one was already charted, and we can see a bullish candle, very, very strong, engulfing the previous one, and it's kind of sketchy, but as you can see, we are still failing to break below this previous PSA, that the one that gave many rejection, and of course we are still far away from the key level. You can actually consider it when you see it closing here instead of closing here, engulfing 3-4 candles. Consider
or even if we close it here, consider a possible entry, because we say, okay, let's see the next candle. We see that is bearish. Let's see how it is. So we can see if we can we see that it's already exhausting, and then we can continuation down, sort of break, retest, and then continuation down. But remember, this is counter trend, so this would have been a possible better entry when we see top wick and then candle flipping here. Let's spot and check how it is the risk reward. Now it's 16 pips stop loss, so it's not even 2 to 1, but it's 25 pips. We are around 10 pips from the key level. Is still high, I'm gonna say, be honest. This is more another high risk, high reward entry, and I will put it here. Okay, the next candle, this one is closing with no wick, as you can see, the bearish one. Next candle, very strong bullish, giving confirmation of, okay, let's see. If I didn't enter yet, I will say, okay, wait a second. Got rejection, reaction, pullback, and then very other strong bullish candle. But where it is closing below the key level. Of course, the next one can dip and then continuation up, so you don't enter a deep close of this one. Let's see the next candle. Okay, so we see that price made the wick up and then closed below. This is for sure a second entry. A risk reward. Second entry. Actually, this is a medium risk, because we already had all these confirmations of break, retest, and then, as you can see, it's already rejecting it. Let's have a look at the stop loss. As you can see, it's 12 pips and almost 30 pips, so it's very good for a scalping range. And we cancel this one. Okay, let's move to the next one. Very small. This one was very bearish, but it reacted at these previous lows. So you say, okay, I want to see strong bearish candle like here. We see another one strong, now more decisive bearish candle, traveling below, closing above this price sensitivity area on the left. Next one, if you're entering already in, okay, this is very good, because what you see, it's this candle open here, made a top wick, and then closed bearish. Still is not a safe entry, because we didn't close below this PSA or the previous lows on the left hand side. Okay. Okay, we have a candle closing below the price sensitivity area, but now it's too dangerous to enter here, because where do you put the stop loss? If you want to put it here, yes, but if the price comes back here and just back down, your trade idea is not invalid. So this one is no entry again, for the same reason, for the stop loss. And of course, you have a very small range to this PSA. So at this point, I will say, okay, wait for the break and retest. Either you see another much clearer retest of this PSA, or you wait before this one, the breaking below. Okay, as you can see, we see a reaction closing above the price sensitivity area, another bearish candle showing that buyers are not coming in control anytime soon, because as you can see, look how many bearish candles in a row compared to 1, 2, 3 bullish candles. Of course, you cannot expect price to just go down. That's why you have to see some bullish, some pullbacks. And as long as it doesn't break structure, it's perfectly fine. As you can see here, bullish, immediately corrected on the downside. We go on the next one. Very strong bearish, closing below this previous weeks. Now this one, for me, is a safer entry. Because you can put the stop loss. Let's see. If you enter here at the close, you can put it here like 10 pips, and yes, you have this price sensitivity area, but you have clear signs of a very strong bearish action indeed. Close with no wick, but at least you are just giving 10 pips as a stop loss. Of course, price might, it will react exactly at this price sensitivity area, because as you can see here, this PSA, that's why the safer, yes, because we have a pullback and a re-entry, but the safest entry is only below this PSA. Yeah, you have flat bodies, okay. But you see that price is pulled back, 3 strong bearish, 2 bullish. The bullish is immediately corrected, completely and immediately, not even giving some order block and then correction, immediately corrected, giving you the chance for here safer entry below. Safest entry when we break below this lows. Safest entry. Stop loss. $16, $15 pips, depending on when you enter, but you have 60 pips of range to take advantage of. So it's very good risk reward. 15, 16, depending on where you enter. And then price is just melting down, and you get the take profit here for every, this is 1812 to 1813, so it's 90 pips and a half. So if you got the high risk high reward entry here, you have almost 90 pips. The second entry, when they kind of flip bullish, bearish here, medium risk entry after the break and retest, safer entry, and the safest here.
absolutely wonderful. TP. Of course, if you might say, yeah, in insight is very good. That's why I didn't take any trade today. And of course, if you enter here at this PSA, you take partials. You're already up 28 pips. There's no reason not to close it, but at least maybe you have taken partials here, 20 pips or 2 to 1 anyway. Yeah, this is okay, 24 pips here. You have the stops the break even, and then the less you let the rest run. So maybe only here, I think, you don't take any partials, you only take, here is 10, exactly, this is 1 to 1, 2 to 1 you take partials, and then you take the rest at TP. Okay. Didn't take it. Confidence. Not in the zone. Distracted. Away from the charts. And this is not acceptable since it's my trading session, live trading session. This shouldn't happen. Never. Okay, so let's move on. We see a reaction here. Of course, we are at another key level. We start to see longer and bigger wicks. We are still closing below the key level, so there's still room for break, a pullback after this bearish impulsive move, a pullback and then continuation down. Let's see what happened after this bullish one. There's another one. Okay, this one very, very nice. As you can see, as we saw here, the very important where is very important here, making a wick and then closing below, or here making a wick and closing below, a wick, closing below, retesting and then closing below. It's very important in price during the live price action to spot it, because this could have given you the entry, because okay, you have this bullish candle closing above 1803, then you have this one opening. Where does it go? Dips below. At one time this was very, very strong bearish. That's why you wait for the candles to close. Very, very strong bearish, possibly with no top wick, but then immediately reacted and closed after touching this high here. Close here. As you can see, the difference between buyers and seller is very important. Look at how small the bearish and how big the bullish candle momentum, part of this momentum was, if you know what I mean. So this is already giving you, let's see, with the on the stop loss side, if you go below these previous weeks, we are at 20 pips, so it's not easy, but you can take advantage of 50 or even 60 pips. So it's a good high risk high reward entry. 20 pips. Okay, and then
let's see the next candle. Okay, this one closed bullish. And then you see okay, and then you see a weaker bullish candle with no top wick on the top, immediately corrected and engulfed by a strong bearish candle. And you start seeing that it might be creating the setup that we usually trade at a rejection of a key level, which is, of course, the... Okay, no, this was wrong. This one. Double bottom in continuation up. So let's see. You start to see not of wick, not of wick, but look at the size of this very strong bearish candle. Let me put this one here. Okay. You see a very strong bearish candle. And the next one is, yes, strong, but it's not closing below. And you have a very strong, you see that is there's a strong bullish. Let's see if there's any wick. Okay, so this is what we were talking about earlier. This candle, at one moment of his life, open here, this candle was like this. Strong, strong, strong bearish candle, reacting at these previous lows, creating a double bottom. If it closes below or closes still below the key level, even if it's not at the same level here, but it closes at the below the key level, or very strong bearish here, then you don't enter yet. You wait for exhaustion and then continuation up, or continuation down, because it's showing that the bearish trend is resuming. You don't enter here as a sells, because you are close to a key level, and you can see here how sellers and buyers worked together with many bearish and small and less bullish candles. After this rally, you see 1, 2, 3, 4 bullish candle in a row, and there are only 2 bearish after that. So there's not yet confirmation. But this candle deep below is emulating also the same of this one, bearish, bullish. Look at the difference between the two. And as we did here, possibly here, when the candle flips bearish or flips bullish, so you see this, and you see in this moment, then we have the second higher risk reward entry with even a smaller stop loss, I guess. If you enter here, you have 13 pips stop loss. And plenty of range to take advantage of. And then you see smaller, weaker bullish, failing to close above these previous highs. Let me mark the up here. then you have a stronger bullish candle closing above these previous highs. Weak bearish. Look at this bearish candle. Yes, this one left a huge wick, but since we are in uptrend, it's very probable that this wick will be filled. Unlikely of this wick on the bottom of a bearish candle in a uptrend. It's more probable that we fill this one more than this bearish wick. Okay, and it's closing above these low highs as well. It's bearish, but it's closing with a small body. I think it's like an hammer above these previous body highs. And then we have weak but still bullish, and then very aggressive bullish candle, small bearish. Look at this bullish, the same concepts. At one time, this was very bearish. When it flips, you can see that this is the reaction, the rejection, and you can possibly have a second entry. Let's see if as a stop loss makes sense. You enter here, stop loss below here, it's 18 pips. You have like 2 to 1, so as a scalper is fine. So let me here. The risk entry 20 SL 18 pips. Then let's continue. You have strong bullish, and you see it's exactly as happened here. So many bullish candles. 1, 2, 3, 4 bearish candles necessary for small take profits, for pullbacks. But 1, 2, 3, 4, 5, 6, 7, more than 10 actual bullish candle. So it's clear that the double bottom created this rejection and then continuation up. The main trend is resuming. And then see another small pullback. As you can see, the candle, these bearish candles are not even engulfing the previous bullish one. So they are not even, you see they're closing, they were engulfing, but they close the same level, very aggressive. You have your partials taken from here, you let the rest run risk-free. Because as you can see, when we are at this price sensitivity area on the left, we start seeing some signs of exhaustion from buyers. There are probably many orders from sellers here. As you can see, we are leaving many wicks. This was very small body and double wick. We are starting to see, we are closing above. We are starting to see bearish candle, another bearish closing at the level. You start seeing, okay, wait a second. If we start engulfing it, if we start seeing something like this, wick, top wick, and then this body, then you can start seeing, okay, wait a second. I don't enter here, but let's see if the next one reacts at this level and it does not break. Maybe we can see this one, you can see a smaller one, and then we can see lower wick, and then continuation up, and then continuation up. You see how important is this lower wick? Maybe it goes a little bit below, but then closes engulfing. But as you can see, you wait, you say, okay, now look at this wick. Didn't know about it. Look at this wick. And there was a moment this candle was completely bearish. The one that I was describing you, I didn't know about it. Look how it flipped, went down, and flipped up. It's not as strong as these ones, but the body is still closing above. And this is giving you a possible high risk reward entry again after the pullback, closing above the this price sensitivity area that was already charted from the morning. You enter here, and now you have like 10 pips stop loss at more than 1 to 3 take profits. And then you got the perfect entry, you are lucky. Let me just say, okay, I sell 10 pips. You got lucky because you got the perfect sniper entry in inside. Bam, 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 just goes 3 to 1 in 4 minutes. You let there, maybe you have some runner risk free, you get even more. You get a break, a retest, not on the dot, but on the dot of this. If you look here, break and retest of this price sensitivity area on the left hand side. It's amazing. This was second entry. Okay. And you can take another safer entry, but it's safer as a positioning. But it's not safer as sort of expecting momentum to continue. Now we know that it goes 20 pips and you are okay because you enter with the stops below here. It's like 10 pips, so it's still 1 to 2. But you have to expect that after 100 pips on the downside, 100 pips on the upside, there's not much juice left, especially with this price sensitivity area on the left hand side. So you have the entry here, but it's very short-lived. You get your 20 pips and you're happy about it, and you close it. Because then you see rejection, you see this engulfing, and then very, very interesting, I gotta say. Let me change it here. Safer entry, sell 10 pips. Don't expect more momentum after all this rally that was done. And this is here. Okay, but as you can see, yes, we got 20 pips. Maybe you have partials, you have break even, but then price is still failing to break below here these previous weeks, and of course failing to break below the key level. then it breaks the key level. As you can see, this is the confirmation of the change and shift in the market structure. Okay, then the last one, this one is exactly where I was looking at it. I was looking at the chart exactly here. Much worse consumer confidence. Let's sell 10 pips. Just random, not based on structure. $30 plus pips take profit, and this is as low as it was the consumer confidence of the United States. Same was low my confidence in the trade. This is the straight truth about it, and now we don't need this one anymore. Why didn't enter here? Reasons why I didn't take it. Not in the zone. Distracted by the smartphone. Not lucid, clear mind to spot murder and safer entries. It's like, I feel like when I lose the first entry, then it's too late. There's no reason why I should enter here or why I should enter here. It's so dumb by me, but it is what it is. That's why I'm making these videos. Okay, guys, let me just put this one here. With a light, nice TP. Very good. That was it for the anatomy of a scalp. See you for the daily recap.